Hello everyone. This is the pre-market report video for today, 12th March 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First, quickly let's see what happened yesterday in Indian market. Despite all the Asian market negative trade, Nifty did open to positive, but back-to-back stock-specific negativity and with some uncertainty all made the Nifty down and below 22,350 mark. To be frank, I lost count regarding yesterday's negative things. Anyway, let's see all those in detail. First of all, last Friday, RBI started to investigate on several banks with respect to the P2P credit card transaction. P2P means peer-to-peer. As per present Indian RBI regulation framework, only P2M is allowed, meaning peer-to-merchant, which means I can buy things using the credit card, but I can't pay the credit card money to my friend kind of. Just for info, paying tuition fees and paying rent using credit card, all those will classify as peer-to-peer, P2P. Hence, as per the RBI framework, it should not be allowed. But on Friday investigation, RBI found that various banks' credit card was used for P2P purpose, especially for paying rents through the fintech apps such as Creed, One Card, etc. This is the first overall banking negativity. Since clamping down all the P2P transaction and the credit card connection with a fintech company, in a way, fundamentally it's good, but it does affect the bank's net interest margin. And also now this is a regulation violation by banks to boost the net interest margin. So this puts pressure on overall banking sector. In addition, bank specific, CLSA rating downgraded the HDFC Bank stock from buy to overperform rating, and more importantly, they reduced the stock price target to just 1,650 rupees per share from 2,025 rupees per share earlier. Because of this, particularly HDFC Bank was very negative. Then for SBI around 12 pm, one of the major US private wealth investment firm Bernstein downgraded the SBI stock to market perform from outperform. And here also they reduced the stock price target to 710 rupees per share from earlier 780 rupees per share. One more thing, Bernstein highlighted that they expect all the public sector banks to underperform due to the poor deposit growth over the private banks, and in the last 1 year PSU banks did increase their stock price value to over 100%. In addition, SBI got additional negativity regarding this electoral bond Supreme Court judgment. Anyway, all these made the whole banking sector under pressure. Then regarding the last minute Reliance negativity, it was not clear, but it looks like Reliance oil tanker which meant to go to US did crashed on BPCL import facility. Here the extent of damage is not clear. If it's severe, then that might add more negative in the stock price today. Even Rogers mentioned that they tried to contact both Reliance and BPCL to comment on it, but they haven't got any reply from both. Moving on, yesterday morning itself, SEBI's chairperson highlighted and issued the warning in her interview that they did found stock manipulation in both small and mid cap stocks, which in turn affected all the small and mid cap stocks. Overall, yesterday more than 75% number of listed stocks did closed on a negative note. Despite all this, FII net bought for 4,210 crore rupees and DA did net bought for 3,230 crore rupees. Again here, please note, don't get conned by seeing the top line FII and DA value, because yesterday Indigo airline promoter via bulk deal sold his 5.8% worth of Indigo shares to Morgan Stanley for 820 million US dollars. If we convert that money to rupees, then approximately it comes around 6,800 crore rupees. Hence, if we take this one stock value out from FII's net bought value, then FII actually net sold for 2,600 crore rupees. So I won't say FII is positive on Indian market. So those were the important takeaways from yesterday's market. Then coming to US, there was not major market impacting news. As we know, tonight US inflation data for February month is scheduled to release. Then on coming Thursday, US retail sales data is due. Here both of them were very important macro and can influence the US market. Hence, there was some nervousness. So, all three US major index opened negative of around 0.5%, but at the end of the day, most of them recovered their loss. Dow Jones alone increased 0.12%, S&P 500 down 0.11%, and Nasdaq mainly dragged down by semiconductor stocks, then closed negative 0.41%. In case of VIX, it increased 3% and moved above 15. In line with that, early morning today, 3 a.m. Indian Standard Time, GIFT Nifty closed at 22,423, equating it with the spot market indicates the flat to negative opening today. And regarding Indian ADR, it was not as negative as Indian market. I mean, as a top line, all of them closed between flat to 0.5% negative. In fact, in Indian market, HDFC Bank, Infosys and ICICI Bank all down over 1%. So if we calculate the arbitrage, all those three stocks indicates the positive trade. Only Wipro was negative 0.5%. About oil, it haven't changed much. At the time of this video, WTI crude trading around $78 per barrel, while Brent crude trading around $82.5 per barrel. So those were the things happened yesterday, and now let's move to new specific Indian market related info. First, not sure about the impact. Banks Employee Federation demands the SBI chairman to resign, so possibly that will be on focus. Then second, PFC board approved the 3 rupees per share as interim dividend. So far this fiscal year until the last 3 quarters, the total dividend is 11 rupees per share. And about REC, they signed the infra project worth 1,20,000 crore rupees with Rajasthan government for a period of 6 years across power and non-power infrastructure sectors. So both the stock price will react to their respective info. Finally, as per open interest, PFC, Cipla, IRCTC, MRF, Indigo and ACC got the long build-up. Apollo Tyres, PVR Inox, Aditya Birla, NMDC, Indian Hotel and India Mart got the short build-up. So as usual, be cautious while trading in those. As a summary, Dow Jones alone closed positive. Other two, Nasdaq and S&P 500 more of negative. And in line with that, GIFT Nifty is indicating the negative opening. However, ADRs were mildly positive, and because yesterday market was significantly negative, anticipating the US inflation data tonight possibly might create some short covering today. Let's see. Then regarding the things to look out, during the market hours at 12:30 p.m. Germany's consumer inflation data is due. Then in the aftermarket hours, first at 5:30 p.m. India's consumer inflation for February month is scheduled to release. At present, the expectation is to be around 5%. Then at 6 p.m. US consumer inflation data is due. The expectation is to come as same as last January month, 3.1%. In addition, EIA short-term energy outlook and 10-year note auction are some of the items we need to keep an eye out today. Coming to technical, because Nifty eroded continuously throughout yesterday, on the daily chart it formed a bearish candlestick pattern with minor upper and lower shadow. In addition, daily Bollinger Bands are contracting, so in the next few sessions is a likely scenario for Nifty is to be in a range bound. However, if we see the last 2-month daily chart, we can see Nifty has been fluctuating within an ascending channel, showing higher high, higher low pattern within the channel. Hence, the overall trend I expect it to be continue to be positive, even though it is currently in an intermediate corrective phase. For a short term, we cannot rule out the possibility that Nifty might decline towards the range 22,200 to 22,250, where the immediate support is, and on the upside 22,400 is the immediate resistance. Then in case of Bank Nifty, it extended the downtrend for yet another session and it dropped below 47,500 mark. Thus, on the daily chart, similar to Nifty, Bank Nifty also formed a bearish candlestick pattern. I mean, if you see the last few trading sessions, Bank Nifty filled the gap it created on January 17 and then it cannot able to carry on the positive momentum, which prompting a downside move. On the downside, it might slip more towards the 46,900 to 46,800, where support is in the form of 50% Fibonacci retracement level of the rise from 45,662 to 48,161, and 20-day moving average 46,818 is placed. And a decisive close below this support range could intensify selling pressure. Hence, to resume the uptrend towards all-time high levels, Bank Nifty must decisively surpass 47,700 22,500 mark. On the weekly options front, the maximum call option open interest was at 22,500 strike, followed by 23,000 and 22,600 strike, with new call option writing at 23,000 strike, then 22,500 and 22,400 strike. Whereas on the put side, the maximum open interest was at 22,400 strike, followed by 21,500 and 22,300 strike, with new put option writing at 21,800 strike, then 21,300. Thus, from the options data, 22,300 to 22,000 is expected to be the key support area, while resistance is at 22,500 to 22,600 levels. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.